Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is, I can get my PowerPoint to work, is live Forex market review, identifying high probability trading levels. So that's tonight's webinar. So let's get into it. Please read through the disclaimer. If you're on our YouTube live stream, I cannot see your chat, but I've given you a link so you can join us in the webinar. For those in the webinar, if you want to talk to me, use the webinar chat or the question and answer box. Got both open. So everybody, please read through the disclaimer before we get into it. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trade Mentor here at ACY Securities. And I'm a full-time trader. Been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can connect with us at our ACY website, acy.com. Go to the Market News tab or our YouTube channel, ACY Securities Australia. If you want to connect with me and my social links, then just head over to my Linktree page, Duncan Cooper FX, and you'll be able to get me there if you want to connect with me. If you'd like to get access to the webinar charts that I'm using, then simply contact nathan.bray at acy.com. I'll put his details in the chat now for you. So any questions about the webinars, if you want to get access to my chart layouts and templates, you need help with a demo account or a live account, just contact Nathan. He'll only be too happy to help you out. There's his details. All right, so let's get into the webinar. So first up, like normal, we'll have a look at the news items. I like to use forexfactory.com for the news. And I'll just make sure it's refreshed. Time shown on here on my time, Queensland time. You can head over here and set it to your time zone. So we do have later in the day coming up, 11:15 p.m. my time, US ADP non-farm employment change figures. And then at 11:30, the US unemployment claims figures could be volatile at around that window there from say 11:15 up to midnight. And then the bigger one for the week is the US job figures. So we have seen quite a nice sell-off of pairs to the US dollar. So there is that potential I was discussing on Tuesday, whether or not we're going ahead and short pattern forming on the dollar index. Have we bottomed? We've got a nice sell-off, but the market may pull back a bit ahead of the job figures. And really for me at the moment, I'm just looking at levels that I can maybe trade around when the job figures come out, because the market may not do too much ahead of then. And I'm very much aware the market's looking at this item. So I'm very much bearing in mind what news is coming out and looking to see what I can do after that event, really. All right, so let's get to the charts now. Dollar index here was drops the monthly scale. So is this a left shoulder, inverted head, right shoulder here? We're pulling back from a higher top. So are we going to be putting a higher bottom here to see a long-term move back up? Of course, we're not going to know that this month, although we could have a very good month up. But are we going to be putting in a higher bottom there on the monthly chart? We are. It just dropped down to the weekly here. Rejection last week at the left shoulder area, getting support at 79% retracement. Now this is actually in a downtrend on the weekly, uptrend on the monthly. So of course, we're going to need to see some form of an uptrend maybe starting to form. Ideally, on the day chart time frame would be ideal. Still actually moving to a lower bottom. We don't have a higher top or anything here at the moment. So it'd be nice to see a higher bottom form on the dollar index to maybe confirm that, yes, we're putting in a bottom down here. And that would be the inverse of what we may be starting to see on the euro dollar, because the euro dollar has also pulled back to its 79% level and failed. So it'd be nice to see this pull back, form some kind of higher bottom, and then do we start to see lower tops forming on pairs to the US dollar? If we start to see that over the next week, then we may need to get ourselves set to be trading pairs to the US dollar to the downside. So we'll just have to wait. It's a bit of a wait and see at the moment. Is this just a short-term bounce from the area of support before more decline, or are we going to see a higher bottom coming on the dollar index? Now, the S&P 500, it hasn't quite changed trend yet, but it has failed just ahead of the all-time high. It's actually almost taken out the last two trading weeks preceding. So really, if you're looking to get short at this very historical high area, then it'd be nice to see this break support, rally, and then put in a lower top. Now, I just want to head back to the news page. We did have it early in the morning. We had the FOMC meeting minutes come out, and at the last statement, it was all about we're going to have 3 interest rate cuts next year, but the meeting minutes didn't really refer to when and how soon. And I think the market has kind of reacted rather bullishly for the US dollar, I think, having read the meeting minutes. So it's not as clear as maybe traders thought as to when we might get an interest rate cut. And it may not be as soon as maybe people are anticipating. So what we're seeing now on maybe on the stock market is we've rushed up almost to the highest point, and we're starting to sell off now because maybe we won't get an interest rate cut anytime, in the next couple of months, maybe the next 3 months. Maybe it's going to be mid-year or latter year before we even can see that. So we may see a lower top form here. So it's worth watching at the moment for a lower top to form, because we're most definitely at historical high points. And usually when you get to historical high points, you often get a failure and then a movement back down. So don't be surprised to start to see a lower top form. And if it does form, then you need to make a decision. Do you want to start to look to short the stock indices? Okay. All right, let's get into the euro dollar. All right, we had a hefty sell-off after last week failing out. This is a monthly resistance area. Go to the monthly charts. Whilst this is a very significant bottom, we have actually broken some smaller bottoms to the downside. So this is potentially a lower bottom to these two bottoms. And we could be forming the head and shoulder pattern here on the euro dollar, the inverse look of what we're seeing on the dollar index. On the monthly scale, fell at the 79% level at monthly resistance last week. Rejection on the weekly chart, and we've been trading down this week. So the question is, will we come up and form a lower top? That's what I'm looking for at the moment. Just going to draw this fib. I don't know what's going to happen tomorrow when the job figures come out, but I would like to see a nice rally, and drawing a fib across this day chart range at the moment. I would like to see a rally back up, and it would be perfect if we could come up to this 79% level. There's two 79% levels here. One of this range that we've just been creating to the downside. Could we come back up and retest this area over the next week? Now, I know it means having to wait. There's an area a little bit shorter. I'm not that interested about this level just there. I'm just going to take that level off. There's a much more significant level here as well. That's the most significant level. That's the monthly level. This is a weekly high. That level as well, which is 110.17, could certainly offer to be resistance for the market to move down. So we're either going to see, watching for a rally. Are we going to come up just to this area? So that's 110.17 and hold to trade down. Or are we going to come up to the 79% area up here and the monthly resistance level? So it's 108, 110.86 up to 110.95. and then do we turn over? So of course, I'm going to have to wait for those levels to be met. I don't really want to be selling after a 4-day reversal. I don't want to be selling on the 5th day. Logically, we'll probably bounce. So then I'm waiting for that bounce to occur and then kind of see a setup to get myself short. And if I can get myself short, I may want to be trying to hold this for the long term, because if we're starting to form a head and shoulder pattern on the monthly chart, this would be signifying a long-term decline. So we'll have to wait and see how the month progresses, or at least the next week of trading. Okay, so I'm looking at 2 levels there in the euro dollar for a possible reversal down. Just being patient at the moment. All right, to the euro yen, which is moving up, and just going to get rid of that line. I was discussing this on Tuesday that we're in some form of range here on the euro yen, and it has moved down. We're destroying the swings. So whilst it's range bound between the support and resistance, it is in kind of a downtrend within the range. It's moving up at the moment. So we may see a rally up to put in the lower top to head back down towards support. So what I would be looking for at the moment is, can we get a 79% retracement of this range from high to low? So I've just moved that down to a 4-hour chart. It would be this range here. All right. And watching 157.67, or it could even get up to 158 once more. It could come up to the top of the range. So I would be watching this whole area here on a lower time frame. Does it start to turn around? To then move back down. Okay. So again, patience, waiting for price to come to an area that I'm happy to look to engage. Can I see a reversal from 157.67 up to 158.38? Okay. Euro pound had a hefty decline. I was looking on Tuesday for this to rally up, but it hasn't been able to do that. So now with that decline that we're just seeing, I would still be here on the 4-hour chart looking for the decline. But let's just go to the weekly chart and just discuss what's happening on the weekly chart. We've moved down. We've rallied back up to weekly and monthly resistance. About at 79% level or just short, pip 2 short, and we're probably coming down into retesting monthly support at 85.47. And are we going to come through to 127 extension, or at least test these lows to the left here? All right, day chart's turned it down. It's broken this swing point low here. So it's a little overextended. It would be great if it could rally. Now, at the moment, it's very negative on the 4-hour chart. So I may just look on the 4-hour chart for the most immediate range, which is lower top to bottom. And I'd be looking for the 79% level. Can price come up to 79% level for an opportunity to keep trading down within the unfolding downtrend that we've been seeing? All right. So that level's there at 86.59. Can we get a rally back up? We're coming into all these lows. There's a low here, a low here, and a low here. High over here to the left. Can we be coming back up to there to turn over? Can you see a setup on a lower time frame? All right, getting into the pound. All right. Now, the pound, it just have I've got lots of lines on here, but you can see the swings on the monthly chart. It's still in an uptrend, but it is fading within this range from high to low at the 62% area. But we do have a higher bottom, higher top, another higher bottom, which is a slightly different picture to the Eurodollar. So I'm not exactly sure if this is topping in here, the 62% retracement of this range, because of the monthly scale. This is the monthly low, higher bottom to the monthly high. So we could actually, I've seen a 79% pullback of this range to then move long term in this year all the way up to there. We'll just have to wait and see what price does in this area. It is at the moment fading at the 62% level of this range from high to low. And if the US dollar is finding a significant bottom, then maybe we're not heading up in that, in that overall uptrend. We could be failing. So I do have a question in my mind as to which way is the long-term trend at the moment. But I have been looking at this range from high to low, and we've been holding, trying to move above the 62% level, trying to move above the 62% level again, and then we fell back below that this week on the day chart. So clear area to watch is this high here at 127.33 and the 62 level at 127.19. So at the moment, I will just be monitoring that area. First of all, this is my first area that I'm watching. And I can also be drawing a fib from this top of the week, the high this week, down to that low, and the 79% level of that range is just short of 127.33. So that's the area I'm watching at the moment. And what are we set? We're only 36 pips away, so we could actually get there today, or we could get there later in the day when the US news comes out. That's the first area I'm watching, so that's the kind of first range I'm watching. There's a larger range. If we move much higher because of the volatility of the job figures tomorrow, then I will be watching this whole range, 79% level up to this high. So there's a couple of areas I'm watching depending on what price does and how it reacts with the news items coming out. All right, I'd much prefer the high level, because then if it turns over, I've got much more room to take profit to the downside, but we'll have to wait and see how things unfold. So at the moment, in today's trading, I would be looking at the lower level. At 127.27 up to 127.33. Or in fact, from the 62 level of the major range. So 127.19 up to 127.33, that whole area there. And at the moment, price is coming up because it's just filling this imbalance on this 4-hour candle. So the imbalance will get filled in here when we get to the 62% level of the major range. All right, so price is just coming up to fill the imbalance that got formed. So what does it do in this area when it gets up there? All right, so at the moment it is just holding at the 12700 level. So you could start to monitor for a reversal for sure at the 127 level, but I much prefer the high level because price is trying to fill any imbalance that got formed. And when we look at the 15-minute chart, there's some more imbalance up here. So the larger area of imbalance, which comes up just slightly above the daily resistance level. So knowing that imbalances usually get filled, I would be waiting for the higher level, for price to come up to the higher level first of all, and then what happens after that. All right, pound yen. Now, Tuesday, I said watch down here. This is how I had my chart highlighted on Tuesday. This is support. We got a fraction short of a retest, a little bit of a sniff of a left shoulder, inverse head, right shoulder kind of thing going on here. And we're moving on the day chart to a higher top. So if you haven't already got in here, it's a little bit difficult to get in because it's a little bit overextended in the short term. But it could well be coming up towards 186.75, which is the weekly high area over here. So it's a question of how can you get on board. So really, I would say at the moment, looking for a pullback. I do notice, I saw this earlier in the day, we do have a bit of a double top up here. So while I say we could come up to this weekly high, there is this area here. Just going to use that high there. Just these two highs are just sitting underneath this area of support that was. So 184.174 is probably where the market could stop. I'm just pausing because I've got a question coming from Patrick. Let me just read it to myself first of all. So you're asking me, is it possible to enter the short at the 62 level and 79% level to cost average? Just in case the price hits 62 and reverse, you still get half the trade instead of waiting for the short trade. So that's 79. Yeah, you could do that if you don't want to miss out. Yep, you can do that. I tend to not to. I tend to, if I was, my much preferred level would be on the pound dollar, just heading back to the pound dollar, would be up here. What I would tend to do in this area is if this comes up to the 62 area here and then starts to turn over, and then I start to feel like, okay, it's definitely not getting to the 79, I would be looking on a lower time frame then to try and get a tight entry and take my full position size, thinking that, yes, okay, it's failed at the 62. But my normal mindset is I'm aware that this area could hold, but I'd be trying to trade up here first of all, which you know is can be, you might feel that's counterintuitive because, well, you could miss out, but I don't care about missing out personally. I much prefer to trade at 79 because it just gives me way better risk to reward for my trade. So at times I'll just miss out because I'm trying to get the better level. Because always in the back of my mind is my concern is that price, like you're saying, you could take half your position here or however you're going to position yourself. You can take some here and then some up here. But I'm always concerned that, the area that we failed at up here, well, we're failing here. And we often get a retest of the area that we failed at. So in my mind, then I'm just kind of really watching up here. Yes, if it fails here, then I'll just have to come up with some other way of then engaging in the pound dollar over the next few days. But I would much prefer to try and get in here because it just gives me such a greater risk to reward. And I can also see that there's still an imbalance up in this candle that may need to be filled. So I can see why price could get back up there because of this imbalance here and to the failure at this high. Well, yeah, what you're saying, you could definitely do that for sure. It's not something that I do, but yeah, it makes sense if you don't want to miss out, then of course you could do that. And of course it gets you in case you don't get up to the 79% level as well. All right. Right, so the pound yen, whilst it looks like it's maybe putting in a very good bottom in here on support, the barrier is here at 184.17. So if you're looking to get long, be very aware that that's the first failure point, and it may be the failure point. Okay. We may just be going to get rid of these two lines. The range could be that we're trading in at the moment. Support to resistance. So, if I was to draw a fib across this range, we're already almost getting towards the 79% level of this upward move. So if we do stall here, there's not, you've already seen more than 2/3 of the move of the range already occur. So for me, getting long at the moment is a no-no. I would either have to see price action. It's obviously moved up. I would need to see it have a pullback to put in a higher bottom, and then make its next ascent. And in this area here, look for your opportunity to get long. If it doesn't pull back, then it's much more higher odds, because it hasn't pulled back yet, that this will get overstretched and hold this resistance area for then a pullback. So it could well come up here, pull back. It could pull back just to put in a higher bottom, or it doesn't put in a higher bottom and then it comes back down to support. So it's a bit long in the tooth, that upward move at the moment to get long. In my mind, now you're having to wait to see if it's going to give you a pullback, or does it start off your fair up here at 184.17? Okay, so that's how I'll be looking at that pair at the moment. All right, Aussie yen. All right, this is how I had drawn in. I'm watching up here at the 79% level. We've had, of the bigger range, a fair at 79% level, a double top. Let me draw the swings in. We've moved down to some form of bottom here, little double top to a lower bottom. Are we coming up? I'm watching the 79% level at 97.20 for a lower top to form to move like so. All right, so I'm waiting to see what happens up here at 97.20. All right, you could also be watching the 97.54 level, 79% level, with this high up here, 97.66. We've topped in that area twice. Maybe we come up for a third go and a third hold. All right, as well. So that's another area across here that you could be watching for failure too. All right, of course, if we blow through that double top, then we're probably coming up to this area up here. But well, at the moment, as I look at structure down the day chart, it's in downtrend, and price action today is just corrective of the move down. So, be it though, it is going up fairly strongly on the day. But you can see the strength, just because it's a long candle doesn't mean to say it's going to continue, because you have a very long candle here to the 79% level, and then it double tops. It can't continue up. So this could have a long candle up to the 79% level today, and then hold, and then move down. So to the 4-hour chart, just watching up here. All right. I'm not going to trade here on first contact, because I'm mindful of it's a bit range bound. It's tested this area up here twice, so it could come up for a third test. Some of these yen pairs are looking a little bit rangy, and we're only into the what are we into now? Third trading day of the year. The market could be relatively, stuck in a range for some of the month before it breaks out up to the upside or the downside. So I'm just going to wait and see what it does at 97.20. Does it start to hold? Do I see a failure on a 15-minute chart? I can then engage that way. All right, to Aussie dollar, which has been rather weak this week. I was trying to get short up here on the first day of the year. Missed getting in by about 10 pips, which was very annoying. So if you didn't catch me on Tuesday, we're still in a downtrend here on the monthly. Lower top, lower bottom. This move that we've been having out for the last 2 months is corrective of the last downtrend move. And we've really moved back up to old selling levels from the levels of last year. Rejection candle last week. Are we holding here to move back down the range long term? That's what I'm looking at myself. So I was trying to get short up here on Tuesday, just missed. So now what I'm looking at, like I've been having similar commentary in other pairs, is I don't want to be selling on the 5th day from the decline. I want to sell a rally. So I'm looking at this range. 62 level overlaps nicely with a very good area of resistance around the 68 level. So it's 68.05. And the high level at 79% level. So really I'm just watching from 62% level up to the 79% level. What happens if we get up there? 68 was a very tough area for the market last year. Price was able to get above it through this area here, but it couldn't hold itself above that area. So we've got similar price action going on at the moment. You can see last year, see how we moved below and then it became resistance just on those two candles there. We came below, spiked above, back down, retested and then moved down. So that's the area that I'm watching for the market to test and fail. All right. Looking for a lower top to form. I'm not yet on all these pairs to the US dollar because the dollar index is looking like it's putting in an inverse head and shoulders maybe. Then on the pairs to the US dollar, I'm looking for price to rally and fail. Now, I'm not actually going to be trading multiple pairs to the US dollar just to, give my viewpoint, because there's still the potential that the US dollar could still decline and break the area of support that it's found support at and follow through and down to a fresh low this year. So I don't want to be multiple pairs versus the US dollar short, but there is a potential that we're at the start of the year and we could be putting in on these pairs to the US dollar the high of the year. So getting short at least one of the pairs to see how things unfold might be a good idea. All right, so watching 68.05 up to 68.34. All right, New Zealand yen. It's at the 79% retracement area at the moment, or just fractionally above of this range. And it's not quite failing there at the moment. All right, it could come up, but it could come back up to 90.20. The 90.20 is an old area of support here. So this double top here is really getting formed along this area here. Now we could come all the way back up to these highs. So this is looking like very similar to what I'm seeing on the Aussie yen. So you don't really want to trade both Aussie yen and New Zealand yen because they're both looking exactly the same. So if one trade works, both will work. If one trade fails, both will probably fail. All right, so the high correlated. Still very range bound here, so I'm just watching to see if it's going to fail. So really the failure area would be from the 79% level up to the highs, which we're in at the moment. We're just starting to get into that area. So do you start to see a 4-hour rejection in this area? Or do you start to see an entry on a 15-minute chart that you're happy to trade? We're in the red zone. We've already done the range for the day, so this is very overstretched. So you could just be monitoring for a trend line break. It's not giving you a trend line break at the moment. It's still trying to go north. All right, so just monitoring to see if it starts to show a reversal. Still going up as I'm talking. New Zealand dollar. This is how I had it drawn up on Tuesday. All right, today chart. It's just coming back up to retest the 79% level today and this day chart resistance. So it may not want to go any further up than what it's doing today. That is the key area of resistance that we are challenging, the most immediate one. So you could be watching on the 15-minute chart at the moment. We have actually come down to a lower point. So any further retest at 62.73, be nice if you could get some form of tight trend line break in this area to downside or whatever your setup is to see if you can see a reversal that you want to trade from 62.73. If we suddenly break straight above there today, then I will be monitoring the larger range. So just back to the 4-hour chart. If we, at the moment, we've got 22 minutes to go on this current 4-hour candle. If we break the 4-hour candle low on the next candle, then we're probably holding here. But if we move above this area, then really you want to be looking at this larger range. And I'd then be looking at the 79% level up here, 63.36. So whilst I can see this may be holding here, as I look at this range, my preferred level is always up here at the 79% level. It's not trading at the 38% level of the range. Now, price can still fail here and move down. But in terms of probabilities, if I was looking at this in terms of probabilities and looking for a level to trade for a reversal down, it would be up here rather than here. All right. If this was to hold here today, then I would look at that level tomorrow for a retest and hold, because today proved that it wanted to hold there. But really, that's just the 38% level of this range. So I'd be concerned that this is getting some selling pressure there because of the resistance level. But in terms of the fib range, it's higher probability that it will come up the range. All right. So I would look higher up for an opportunity to look higher up for the opportunity for a lower top to form. So a lower top to form here on the day chart to then move back down the range, because we've come back up just underneath the monthly highs of last year. All right, so we're getting selling pressure short of the highs that were formed on the monthly charts through April, May, June, July last year. So that would be the most logical up here to have a look if it can get up there. But over the next, week, if we start to, hold here, then this becomes a level to watch. So I'll have to see how price starts to unfold at this area over the next couple of days. All right, dollar Canadian. Now, this is how I had it mapped out on Tuesday. So looks like we're going to have a day down. So I'm looking for some form of higher bottom, ideally to form on support at 132.62. All right. So it needs to do a few days of trading. Can it come down at 32.64, close to, and start to hold? And then can you see an opportunity to buy on a lower time frame? Just pausing because Patrick's just asking me another question. So you're asking me when do I use the monthly high and low? Well, I was using the monthly high and low to draw a fib as I was discussing the pound dollar, because the trend on the pound dollar from a monthly perspective is up. So I was just referencing that we could still be in an uptrend because the overall trend on the monthly chart is up. So if the overall trend on the highest time frame monthly is up, I would draw the fib from low to high. All right. I don't always draw the fib from the monthly range. Depends what range that I'm considering at any given time. So I don't draw it on every pair. But as you're asking me the question, this fib that I've got drawn here at the moment on the dollar Canadian is actually across the range of the monthly chart. So if I go to the monthly chart, I have a bottom here, and we moved up to just a fresh high here on dollar Canadian on the monthly chart. So that's why I've got my fib drawn from low to high. As I'm showing on the day chart, it's across the monthly range. And we've come a little bit below the 79% level and then back above. And I'm looking for support to come in along what is day support and overlaps with the 79% fib level. So I'm looking for price to now have a pullback into the area or close to maybe act as support to move up. So there's another example of using the fib on the monthly range on the dollar CAD. But I don't necessarily draw it on every pair. It all depends what I'm seeing and where we're positioned within the bigger picture range, okay? All right, so on to dollar franc. Dollar franc, out of all the pairs versus the US dollar, the dollar franc is definitely the most strongest. And this is how I had it drawn on Tuesday. So we could come up for a retest of 85.52, which is this monthly low. And we rejected it yesterday. So that being said, you know, if you were on a lower time frame, if you know what my 4-hour entry mechanism is, which is a break of a candlestick low after you hit support or resistance, then there was an entry here to get short. Stop just goes above the high. But that's the level to watch. We could see a revisit of that level as we get the job figures data, some of the job figure data coming out tonight from the US, and then the job figures, unemployment figures tomorrow from the US. The key level still to watch would be 85.52 as resistance. We could see, assuming that level is going to hold, we could draw a fib across that range, go to the 15-minute chart, and then you could look for price to come back up the range. Again, I would look at the 79% level, up to the resistance level. Up here, I would be looking for a rally to come back up to. That's assuming that we get a rally, okay? But if I'm looking for a sell, after seeing price fail up there, I don't want to be selling down here at the bottom of the first day's decline. I want to try and sell some form of rally. All right, now, whether or not it'll get up to the area, I don't know. You'll have to watch. Currently today, it seems to be failing at the central pivot point, so it may not be able to get up there. But in any event, looking for a failure up here, a retest of the central pivot point today, and then failure would be great. If you can't move above the central pivot point today, that's just showing you that it's weak to the downside. So, you know, definitely seeing failure at monthly broken support now being resistance. So this is just holding to a clear downtrend. Can we see a retest of 85.52? Or back up to the 79% retracement level of that range I'm seeing there on the 15-minute chart. Right, that's my thoughts on dollar franc. Now, dollar yen. Been waiting for weeks for this to have a very lengthy rally back up the range. Be perfect if it could get back up to this area where it broke weekly support. Can it put in a major lower top on the weekly chart? That's a long time away from happening at the moment. So at the moment, the area to watch is this area of 2 weekly resistance levels here, 144.43 up to 145.06. So a day chart has moved above the last lower top. So this is the area of contention to watch. You don't want to be buying anywhere near this area because this could be strong resistance. But there's definitely the idea that you could be trading back to the upside, but you might want to be looking for price action on a day chart, first of all, to form some form of higher bottom. So we have a bottom here. So it would be great if over the next 2 or 3 trading days, if we could pull back, you might see a little head and shoulder pattern form here. for its continued move up the range. Now, if we don't pull back, you could be looking for a failure in between 144.43 and 145.06 for some form of pullback in the short term. All right, so I'm just monitoring the pair at the moment as we're just starting the new year. Are we going to see a higher bottom form? If we do, that may then lead to us getting all the way up towards the 159.50 level. All right, but we'd have to certainly surpass 145.06. All right, so at the moment, I would be looking for it to have 1 or 2 days pullback, and can we start to form a higher bottom? And then, you know, can you see an entry on a lower time frame to get long? It's had really, since its load, it's been 5 days since its load. Yes, there's 3 blue candles there, but it's been 5 days since it put its low in, so it's due a pullback. So I wouldn't want to get caught long on top of the move at the moment. Now gold, this is how I had it set up. This is where price was when I did the webinar on Tuesday, and I said this was to close back below the 62% retracement. That may be a good signal that we're going down, and well, that was true, and we have moved down. A bit overextended at the moment to the downside, but what we're clearly seeing is, we go to the weekly chart, we're clearly not wanting to move above these highs. These are monthly highs if you go to the monthly chart. 1, 2, and 3. We're clearly being pinned at those 3 highs. Whilst the weekly trend remains up, higher bottom, we could now be, higher top, higher bottom coming in, but we could be forming a lower top here. We're holding at resistance. Day chart, it's put in a minor lower top already. So that minor lower top is where you want to draw your fib from. I'm going to get rid of this weekly fib because we may have topped out here up here. So I'm drawing a fib from that minor lower top to the current bottom. Move it to the 4-hour chart. So that's that range there. As long as that day downtrend is starting to form holds in play, then we could be coming back up to 79% level. 2070 is the monthly resistance level. So it's 2068 to 2070. Can we come up for a retest of the monthly resistance to hold? Do we start to see a further failure there to continue the move down? All right. We've got a massive false break over here above those monthly highs back in early December, but late December, start of January, that area is just acting as resistance. So it's a clear, that's a major level of resistance that every trader should be looking to short at. Three monthly tops that have been false broken, come back up to retest for holding. So you don't want to be buying into that area. Your option is to do nothing or look for a trade down. So I'd be watching 2068 to 2070. Can we come back, retest and fail for a continued sell-off from that area at the moment? All right, so that's my thoughts on the pairs that I normally go through. Any final questions, just let me know. We're probably, on the pairs to the US dollar, we're probably going to see a bit of a rally. Just seeing where that euro yen's at. So 79% at the moment. Where's that Aussie yen move to? Aussie yen's not got up to the 79% level yet. We're probably going to see maybe some form of move up on the likes of the euro dollar and the pound dollar as we head towards the US job figures tomorrow. This is coming into that 62 level area right now from the higher time frame. And the 79% of this range. So, I mean, in this range, if you want to engage today, you could just be looking for some form of trend line break. Can't really draw the trend line in at the moment. Trend line would need to be drawn from there up like so. But it'd be nice if you could draw a much tighter one. If some price action forms here, Can you draw a tighter one to see a break? All right, so it's in the area that I highlighted before. Are we going to see a reversal down from that level? You can monitor that. All right, no more questions coming in, so I'll just give you a heads up. Next week, webinars from me will be at 8 p.m. Sydney time, like normal at the moment. And my next webinar will be on Tuesday the 9th, Tuesday 10th, so that's Tuesday, so Wednesday the 10th. I'm going to go through the topic of order blocks. That's Introduction to Smart Money Concepts Part 2. And then on Thursday, I got more analysis. So that's what's coming from me next week. So my webinar is at 8 p.m. Sydney time. Just come over to the webinar page and register your interest. Tuesday the 9th, Wednesday the 10th, and Thursday the 11th from me next week. There's other people doing webinars as well. So I don't mind you attending other people's webinars. Lucas does one on a Tuesday. Nathan's usually popping in and out somewhere as well. So just head over to the webinar page and register your interest and make use of the free webinars that we're offering. Thank you, Patrick. All right, everybody, I'm going to leave it there. Be very much aware of the high impacting news announcement tomorrow from the US job figures. With that in mind, have a great rest of the week trading and look forward to seeing you next week. Thanks, everybody.